Rajendra Gogri now is joining us, CMD of Aarti Industries. Rajendra, good afternoon. Thank you so much for your time. There's a very interesting development happening at your company. You have tied up with UPL for a joint venture. I want to understand what exactly is this new line of business? Two chemical majors such as yours and UPL coming together. What business will this be done in this JV, and what is the earnings potential in the next 2 to 3 years?
Yeah, we'll be setting up a new facility to manufacture high value specialty chemical and Aarti industry will be supplying a key raw material, various amines, and UPL will be supplying other raw materials. The production is expected to start in first quarter of FY27. Investment will be about 300 crores and sales potential about 400 to 500 crores, which should happen in FY28, FY29. So that's a broad
Okay.
contour of the deal.
Sure. So FY28 around you expect 400 to 500 crore worth of revenue on this on a 300 crore investment. But talk to me about what could be the margin profile of this. Is it going to be towards the higher range of let's say 15-16% or lesser than that? Broadly, if you can indicate that to us.
Yeah, it will be 20% plus margins what we expect from this product line. Additional benefit what will come is that it will increase our sales of amine, so that which will be selling to the GV, and so that sales will be around 200 to 250 crore from Aarti Industries to the JV company Ojin.
Point taken, but overall I understand that the agrochemical segment still remains a bit of challenge. In our conversation with analysts and experts, they have been talking about that volumes are only going to recover from the second half of the year. In the context of this, are you sticking to your guidance or are you looking at trimming it down as well? What's your expectation of the volume growth in this in agrochemical?
Yeah, this year, and as we have mentioned earlier, the agrochemical growth may happen more on second half. And that's why the current year, the guidance also we have given much broader, 1450 to 1700 crores.
4 year kind of a pressure period where there was so much of dumping by the Chinese. Not only volume was an issue, but pricing. You think by second half you're confident that it's coming back, right? And where will your margins start trending towards, say, March of 25?
Yeah, basically the margins will increase as operating leverage will kick in. So transfer from operating profit to EBITDA will be higher. So we expect the margin at constant raw material prices also to improve going forward.
Okay, you are expecting the margins to improve as well. And what about the working capital situation, sir? Because at one point of time, the inventory was high in the system, the Chinese dumping, etc., across the globe was having an impact. Could you talk to us about how the entire supply dynamics is shaping up with respect to the export opportunity as well?
No, overall, our exports have even increased in FY24 and going forward also as a export as a sales will be more than 50% for this year.
Yeah. Mr. Gogri, if you can allow me that we have you here, just to ask a question on Aarti Pharma, which is the company which got demerged from Aarti Group. Very good numbers this time around. How are the overall things looking there?
Yeah, overall things are looking good, but I think I am not the right person, to give more on that,
Not a problem, not a problem. Let's come back to main Aarti Industries then. You had given a very detailed capacity addition and gross block addition plan as well 2 to 3 quarters back till 28. Are you holding on to that plan? You make any revisions given how the demand supply scenario has been volatile, or are you staying with that same plan?
No, basically we are going ahead with our capex, which we had mentioned that FY24-25 will be around 2,500 to 3,000 crores, and we spent about 1,300 crore last year. So this year also about 1,600 to 1,800 crores we'll be spending. So our capex plan is on track, and new entire chlorotoluene range commissioning will happen in FY26. So that all expansion plans are on track.
Because of these expansion plans, your debt levels are also expected to go up. There is part of the street which is expecting the debt could be around 5,000 odd crores. What's the, how one should view the entire balance sheet situation right now?
No, I think 5,000 crore is not a right number. We are currently around 3,200. So debt definitely will increase in FY25. And maybe FY26 it will stabilize. Currently around 0.6 is the debt equity.
What are you comfortable to take it up to in terms of absolute number when you're saying, of course, it will increase because of the capex? What could the number go up to? And even this 0.6, are you comfortable till 1, 1.2? What would be your target or the outside range that you will take the debt to?
Debt equity, I think we'll like to keep between 0.6 to 0.8 as a number. And this year, maybe it will go to around 3,600, 800 crores, depending on the raw material prices, because that determines the working capital requirement. So that is the kind of debt may happen this year.
I think broadly we understand where it's going. And Mr. Gogri, anything that you want to highlight in terms of the pipeline? Because I understand, of course, your forte has been those complex chemical reactions backed by the high R&D, etc. as well. Anything in the pipeline that we should watch out for, let's say as a completely new chemical or a new product line, etc.?
This chlorotoluene range, what we'll be doing, virtually they are not made in India. So there will be entire new range with new chemistry there. So, and we are doing a lot of further R&D. Will be first time a multi-purpose plant also on ground. So, where a lot of new products and new chemistries will be able to perform.
The other thing, just quickly, because you spoke about it, I understand by 28, you're only looking at a 400, 500 crore kind of turnover. But then onwards, say 29 by 30, can there be a major ramp up with higher margins over there, say 2,000 crore plus kind of turnover?
Now, this particular joint venture, we are putting up a site, this manufacturing facility, which can have a turnover of 400 to 500 crores. So, if we see a potential of increasing the increased demand, and if we put up an additional facility, then it can go further. But as of now, the 300 crore investment, what we are putting in, I think 400, 500 crore will be the upper range.
Okay, sir. On that note, we'll let you go. Thanks so much for joining in and patiently answering all our questions. Really appreciate you joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.